Hello and welcome to this first episode of Your Next Trade. We'll be talking today about a sea of red. Today is the 3rd of September 2022 and I'm Gregoire Dupont and I've been trading for more than 20 years and mentoring people for more than 7 years. So a quick disclaimer, you can see at the bottom of this spreadsheet, this video is for educational purpose only. Read the rest and make sure that you know what we're going to be doing today. So we'll be looking at three things today. We'll be looking first at the asset performances year to date and week to date. So what has been happening in the markets recently. And then we will be jumping into the technical analysis. And then for your next trade, we will go and be looking at the next catalysts. So let's jump immediately into the year-to-date asset performances. So just to give you a quick color, equity market here in blue have been really struggling. That is true for developed market from the US with the Nasdaq as of yesterday, Friday, down 25%, the S&P down 18%. That is very much the same if you look at Europe, which is down roughly 20%, but or 17.5% for the Euro Stoxx 50. But if you add the recent weakness of the currencies versus the US dollar, and when I say recent, we are talking now about 8 to 9 months. So the dollar has been really strong over the last 9 months, up 10 to 15% versus most currencies. You see this outlier, which is the Bitcoin. Bitcoin down 50 to 60%, so cryptocurrencies have been really struggling. And then on the right-hand side of the spreadsheet, you can see that the gold in a risk-off market has been struggling, down 6%, with WTI up 15%. So what has been the picture of the week to date? So since we had Jackson Hole last Friday with Powell making sure that the market understand clearly that the Fed is going to be hawkish and is going to be here to keep the inflation or to reduce the inflation, markets, assets have been really struggling. So market, S&P, Nasdaq down 4 to 5%, similar in Europe, dollar pretty much up 1 to 2% versus most of the currencies. But what is interesting as well is most of the commodities, we are talking WTI down 7%, copper 7%, natural gas in the US down 5%. And more interestingly, for those who are trading Europe, European natural gas down 35% this week after having like a massive jump and up 300% over the last 3 months. You've probably saw the headlines that was announced yesterday evening, just 2 to 3 hours before the close on the US market, that actually Gazprom will not going to be reopening the gas to Europe, and that was expected to be reopening this Saturday. So you could expect next Monday when the European markets will reopen, not the US because it's Labor Day in the US and the market will be closed, but you're going to have still these headlines about Russian gas flooding or not flooding into Europe. In terms of sectors performances, the way we look at it is we look at the S&P, we look at the indexes, then we start and we try to calm down and look at the different performances of the sectors, the 11 sectors of the S&P. You can see that the only outlier, the big outlier is the energy, the XLE, a bit of the XLU. Year to date, but other than that, if you look at the S&P down 17%, 9 sectors actually will be down for the year and will be down double digit. On a week to date picture, so this is here, interestingly, you can see that everything was down for the week. Energy down 3%, technology down 5%. So really a bad week for the overall stock market. Week to date industries performances, so we go down another level from the index sector to the industries. So that's on the year to date picture. Really the only let's say good sectors, industries that are doing fine is the energy, the US dollar as well, which is your third one, which is doing fine. If you look at the S&P, which is around here, we are talking again 18%, but you do have a lot of industries, so it's much bigger here than it is here, that are down more than the S&P. So Actually, there has been in a market sell-off. There has been some beta, meaning that most assets will have been down beta adjusted like the market. But then over the last 8 to 9 months, there has been dispersion between the industries. You see everything that was pumped up before in 2021. We are talking online retail, social media, internet, cloud, semiconductors. So the semiconductors have been suffering big time this week on some talks of the US not allowing companies exporting chips to China. So we are talking names like AMD, Nvidia. So Nvidia was down 15% on Thursday, down on Friday. So if you look at the SOX, the Philadelphia SOX index really has been struggling for the year. This is something that we discussed in January when we look at the big picture, that potentially based on the cycle of the economy. So semiconductors are very cycle oriented, and I've been through one or two at least, and I can tell you, and I told you in January, so there was potential of a trade of 30 to 50%, and this is what is happening on the SOX index. What about the week to date industries performances? Only one winner, so that's the US dollar. King dollar here. You can see this is on the week to date. So literally this week, the only place in town to be safe was being long the US dollar. Other than that, everything was coming down. What is interesting, for if you look at the names that are here, we see metals and mining, we see steel, we see some sectors that actually are more linked with the overall economy, the industry. So there has been some talks that obviously China has been slowing, as we're going to be seeing later, and we might expect as well not to China to reopen as much as quickly as that was expected. So why? Because they are still applying a lot of lockdowns, and that tells you why a lot of those sectors that are linked strongly to the economy have been underperforming for the week. So metals and mining, which were the winners before, they're still down 8%. So quickly now, looking to another asset class, looking at bonds. Why we need to be looking at bonds? Because if you've been trading stocks, one of the first things that you will know is the bond traders will always make the joke that the stock traders are the second derivative of the bond market, and that you need to be looking at the bond first. So quickly to look at the picture here, I put some names, some countries from the US to Brazil, and I look at the 10 years, and I look at the 10 years on two different time frames. You can do more than that on the week to date, which is here, and on the year to date. So week to date, bonds have been selling off. So when bonds are selling off, that means yields are going up. So you can see here that most of the yields week to date have been going up. 15 bips, 0.15% in the US, 32 bips in the UK, and overall for the year, you can see clearly. So that's for the US 10 years here, that yields have been literally going up big time. So we are talking 1.7%. And another interesting chart that you should be looking at if you are looking for IDs and if you're looking at macro and the positioning of your portfolio is the yield curve and how the yield curve has been doing. I like to be using the 10 versus the 2, so that's something that I explained clearly in the 4x4 video series, where looking at the different cycle, the steepening or the flattening or the inversion. In that case here we are talking 0%, so there is inversion of the yield curve, is a very good leading indicator for the US economy. As you can see now, the US 10 versus the 2 is standing at minus 0.2. It has been going up a bit, so don't necessarily pay too much attention of saying, this is the end and the market, the end of the slowdown, and now the US economy is probably going to react well. This is way too early. We are still into negative yield. What about the euro dollar? Why do we mind about the euro euro-dollar. Euro-dollar is another way of looking at the Fed expectations. We know that in 10 days' time we got the FOMC meeting, which is the meeting for the Fed in the US. So that will be on Wednesday in 10 days. And we like to know what is the market pricing. So the market is pricing here a terminal rate around March 2023, meaning that the market is expecting a peak in the Fed or in the Fed fund rates in March 2023. Then market is expecting cut from this level. So until March 2023, you can see the hikes. So we are talking between now and March 2023, we are talking roughly 70 bips, which puts you into the 3.2%, 3.3%, which is actually very similar to what you have around the US 10 years. And then the market is pricing, because of potentially inflation coming down massively, and as well the US economy slowing, for the Fed to be cutting rates. That is against what some Fed participants have been saying, that they will not be cutting rates in 2023, and potentially that they will not do much to make sure that inflation will come lower and we stay low for quite a long period of time. Another thing that we have been always looking as equity traders and overall understanding the volatility is we look at the easiest, let's say, tool to look at. It's not the perfect one, but it helps. That's the VIX, which is the implied volatility for the S&P for the next 30 days. So these days it is at 25.47%, so 25%. So we went from the 17% at the start of the year. We had some different spike. Then this rally that we had in July and August when volatility came down a lot. So we reached the 20%. And since then, for the last week, we have been bouncing from 20 to 25%. So that's the overall picture. Looking at what the market is pricing for the VIX in the future, in the near future, from now into May 2023, you can see that most of the time, the next contracts will be trading higher. There is not even a big spike around the election in the US. So in terms of VIX, this is the overall picture. So now quickly, I would like to jump into technical analysis. So technical analysis, we always start with the S&P and looking at the futures, and looking at this picture, you can see that we make highs, and literally around mid-August, we touched that level, which was the resistance from this trend line, but as well that was the 200 moving average that you have here in yellow. Since then we have been coming down massively. I didn't put the volume profile in this trading view, but what I've been tweeting and sharing with the community is you could expect some fight around the 38.30, 38.20, between 3800 and 38.30. This is where you're going to have most of the fight first, and I think this is important. Why? Because the market, the price action is really weak, and until you get the reset of the OPEX, which is happening in 10 days, there is a good chance that we're gonna at least gonna be testing this level. Looking at the Nasdaq, the picture is the same. The trend is lower, so that's the trend lower. We have obviously not been making new lows yet, but what you can see is we are trading below the 200 days, below the 20 days, and below the 50 days. So on different time frames, very weak market. Russell 2000, looking at the broader picture, I think this one is more interesting because you can see that we touched a support. So that's something that we discussed recently when we were doing mentoring and those videos. So now you still got a potentially 10% downside for the Russell. Quickly, for those of you who are trading the DAX and trading Europe, all the lights are flashing towards Germany. Why? Because Germany is massively dependent on Russian oil and Russian gas, and that's making clearly the headlines for Europe. So the trend is still down. As you can see, there is a support that is a bit below this level, so 5 to 6% from here. If we break this level, you can assume that there is a lot of pain. So if you want to trade futures, or if you want to trade actually options, you could be looking at 12,500 around this level as a strike, and below for good strategies. In terms of market breadth and how the market has been looking and behaving, here we are looking at the percentage of stocks above the 200 days. As you can see, we are trading down and pretty close to low level, but there is still a bit of room. So the market is a bit oversold, but not completely oversold. So always be careful, because when you start trading, you'll be looking at the RSI, for instance, and people will tell you, oh, if the RSI is trading below 25, then this is a buy indicator, and then you realize that the RSI goes from 25 to 15 to 10. So oversold market doesn't mean that it can't be more oversold. For the time being, I don't think this is massively oversold. There is still room to go. If you look at the same picture on the 50 days moving average, and the number of stocks that are trading above this level, you can see we are talking 37%, but recently we went into the low 10s. Quickly talking about NVIDIA, because I would like in these weekly calls to be discussing some of the stocks that are making the headlines. So that's the NVIDIA story about China and US and US not allowing NVIDIA to make business with China. As you can see, we are getting close to a very important level. For those of you who are looking at volume profile, got access to it. There is a lot of obviously activity that has been done around the 125, 130. So very important level. Other than that, if it goes below, then you are in big trouble. Another chart that I would like to discuss, so that was not this one, that was the Meta from Facebook, which is Meta. If you are trading a Facebook, the old Facebook, this is the trading range that we had for the last couple of months, where we are trading between 155 and roughly 180. When it's going to go, one way or another, it's going to be a pretty big move. So this is one of the stocks that I will be monitoring. You can be adding Apple, which is going to have their big meeting on Tuesday, and obviously based on the weighting of Apple in the Nasdaq and the S&P, that is a very important driver of the market. So put this chart. Euro dollar, so that's the chart of the euro dollar that has been on the downtrend since the start of the year. It's a one-way traffic. We are down 12-13% year to date. We have been testing on a short-term frame the 99 level. So far, there is no other indication that we could go lower. So that's another leading indicator for telling you where the overall risk-off market is going to go. The dollar yen. So dollar yen, we have been discussing a lot through the community, a lot through the mentoring, not only through the currency, but the JGBs, how the Japanese 10 years could stay that much lower. And that's why the Japanese yen is so weak. Again, one-way traffic, the charts are pretty obvious, gives you some easy stop loss if you get a position. Finally, I would like to discuss the WTI. So WTI, a lot of noise of how WTI could be only at 85 when the Russians are not going to send any oil, when they feel like there is a lot of scarcity. So if you look at this price action, pretty weak actually, even weak for this for the last 5 days. Obviously, the headline of the slowdown of the economies are not helping, meaning that there could be some distraction in demand. You really need a massive recession for those demand to come down. Similar, if you look at levels, if you look at volume price profiles, we are talking, if we break this 85 level, the next level is 75 something. So you get $10 downside. So now I would like to come back into what we've been discussing, which is the The week, so what has been the week so far, what we went through. So the end of the month, start of the month, so that was the end of September, end of August, start of September. So you always got some funny rebalancing, which was true for the euro dollar, which was strong on the last day of the month. Since the Jackson Hole speech from the Fed Powell, we are down 6%. That's a one-way traffic. We had as well on Thursday the Chinese ISM, which was pretty poor. So that's the chart that you have here, which is still around 49-50%, but that tells you, in other words, that that China is not restarting, and that potentially the Chinese GDP is going to be lower than what we thought, like even not so long ago. In terms of what's your next trade? For China in mid-October, you get the big meeting from the Politburo in China. So they're going to be making a lot of decisions, a lot of headlines. So that's really something to look at. ISM manufacturing that we had in the US, which was at 5250, something around those lines. So the headlines were okay. The prices actually were pretty good, as you can see here. Prices are coming down and into the low 50s, which is a positive, meaning that this is a leading indicator, and you can expect the CPI PC to come down as well. Some of the issue that you have with CPI and PCE is renting and jobs. And wages are sticky and making 70% of those indicators. So it's going to be taking a bit of time for the headline inflation to come down. Positioning, what is the market? Where is the market? In terms of gamma, for those of you who don't know much, you can be watching some of my other videos. Roughly for the S&P, we are at 4,100, so we are talking 200 to 300 points from here. So quite negative gamma, and as long as we don't reset in September, in 10 days time, there is no reason that we're going to change this move. NFP's report yesterday were okay. Sorry, here I made a mistake. So the 3.7 unemployment rate and not 5.2% was still a bit higher than the 3.5% before, just because the participation rate is on the move. Again, this week, what we mostly had in the market is the Russian headlines of them providing or not European electricity. Finally, I would like to discuss this big seasonality. So if you've been following me for quite a long time, that seasonality is part of this market. You can say whatever you want. There is seasonality in the market, flows. And if you look at history since 2000, you probably know now that equity markets are pretty weak in September. So we are talking on average -1 to 2%. So that's your overall picture for the seasonality. So now what is your next trade? What are the catalysts? So on Monday, if you are in the US, you're going to have some nice time because the market is closed. In Europe, we do have the European Services PMI, and we're going to have the announcement of the new UK Prime Minister. So you're going to see some potentially some volatility both in the UK and in Europe on both the currencies and the equity market. Tuesday, ISM services. So that's for Europe, and that's true as well for US. Nice leading indicator, very important for ID generation. And for this week, we do have a lot of central banks decisions. Start with Australia on Tuesday. Then on Wednesday, we get the Bank of Canada, and big day in Europe on Thursday with the ECB, where the expectations are between 50 bips and 75 bips. And then on Friday, the Chinese inflation. For the equity traders, you have the Apple meeting, so that will be a SPY, a QQQ, an overall risk on, risk off, good indication. So that is around 6 or 7 p.m. in the UK. So I think it's 1 to 2 p.m. New York time. So that will be a big mover. You don't have that many earnings for the week. Really, the earnings season is almost over. So not that many names. Still, you're gonna have some names that are gonna be making the headlines. And finally, really the most important thing of this week is on Thursday, which is Powell who is making a speech at the Monetary Policy Conference. So that will be really potentially the biggest driver of the week, keeping in mind that from Sunday the Fed is in blackout period, meaning that they are not going to be allowed to say anything before the FOMC meeting. So this is a light week, a bit of catalyst around Apple and around the ECB decision and Fed Powell. So this is it for us today. Really what I want to do for your next trade is looking at what happened this week, what are the drivers, what is the price action technical analysis. For more advanced and specific topics, I'm going to be other videos. So if you would like to know more about the 4x4 video series and or the mentoring, you can reach me by email, greg@duponttrading.com, or going into the website. We recently launched a new trading community on Discord, so feel free to join. We just launched a channel for newbies, and we will be very happy to see you on there. And finally, don't forget to subscribe to the YouTube channel to know more and having the next videos. So subscribe, and any question, you send me an email. I hope it helps. Have a good weekend, and see you on Monday in Europe or on Tuesday in the US. All the best. Bye-bye.